Welcome to Dr. Fred Markets. This is not financial advice. Most people will never understand how crypto, AI, and global finance are reshaping the world. The rules are changing, and the ones who adapt early come out ahead. You're here. You're paying attention. That already makes a difference. Let's go.
Index funds are quietly turning you into the exit liquidity for private credit billionaires. Signal 1. The S&P is ripping again, up 0.78% today. Nvidia up 2.6%. But the average American's diversified 401k still owns one thing: public stocks that now represent less than half of global investable assets. Signal 2. Private credit funds, the cousins of loan sharks and suits, now manage over $1.7 trillion, up from under $400 billion a decade ago, and they're on track to blow past $2.5 trillion before the next World Cup finishes extra time. Signal 3. The biggest winner from this shift isn't your bank, your broker, or your government. It's a weird little corner of real estate. Data center REITs, the landlords of AI and private credit itself, quietly raising rents on the entire financial system. Here's the cliff. You keep playing in the public stock stadium while the real game moved to a locked VIP room your index fund doesn't enter. Let's connect the dots. Start with today's headline circus. Wall-to-wall coverage of Netherlands versus Morocco, Trump versus Iran, Chinese fraudsters, ballot name drama. Meanwhile, the only data point that matters barely gets a sentence. China's factory activity just accelerated on tech export demand. Translation: more servers, more chips, more bandwidth, more data centers, and more private lenders stepping in to finance all of it when banks tap out. Every AI model needs three churches: power, cooling, and real estate. Power gets the headlines. Chips get the memes, but real estate is the toll booth, and that toll booth is now being financed by private credit, not your sleepy regional bank. Banks are strangled by regulators, Basel rules, capital ratios, stress tests. They still lend, but slowly and with a helmet on. Private credit doesn't wear a helmet. It writes a loan on Tuesday for a data campus or server farm that needs to be online by Friday. Now marry that to the AI land grab. Every tech company wants its own GPU temple. But here's the trick. A lot of them don't want to own the walls. They lease, long-term, with built-in rent escalators, from data center REITs and private infrastructure funds. So you get this triangle. AI demands compute. Compute demands data centers. Data centers demand financing, fast. The banks blink. Private credit steps in. The REITs sign the leases and quietly ratchet rents higher. Where are you in this? You bought an S&P index fund and a tech ETF. You got the noisy tip of the spear, Nvidia, the cloud giants, but not the toll collectors and not the lenders who own their cash flows.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
Here's the one thing you never hear on CNBC. The more passive investors pile into broad indexes, the easier it becomes for private markets to harvest all the weird, chunky, high-yield cash flows before they ever touch a ticker symbol. Index funds are like watching the World Cup on a 10-minute delay, with ads while high net worths are live streaming from the VIP box and betting in real time. Now layer on today's China signal. Factory pickup from tech exports means more hardware shipments, more AI buildouts, more storage, and more cross-border data flow. Those packets land in data centers in the US, Europe, Singapore, facilities often owned by a handful of REITs whose tenants sign 10 to 15-year contracts. Those REITs then go to private credit funds for flexible, high-interest financing that your bank won't touch at that speed or size. So here's the real mechanism: AI boom, server demand, data center scarcity, rising rents, fatter cash flows, private credit lines up to fund expansion. Your index fund shows up last, after the juicy part is already locked in. Verdict: if you only own broad stock indexes, you don't own the AI future. You rent a front row seat to other people owning the plumbing. What do you do with this? 3 brutal, practical steps. Not financial advice, just the truth. 1. Audit your exposure. Write down how much of your net worth sits in default public stuff: S&P, total market, closet index mutual funds. If it's over 80%, you're basically a passenger in the economy, not a partner. 2. Learn one layer deeper than stocks, not 10. 1. That can be listed data center REITs, listed infrastructure funds, or public vehicles that hold stakes in private credit. Look for long-term leases, high renewal rates, and borrowers who are AI tenants or infrastructure operators, not just random office buildings. 3. Reframe boring. Everyone chases the next NVIDIA. The real game is who gets paid every month before NVIDIA even turns on the lights. Toll booths, landlords, and lenders. Any portfolio that ignores those three is cosplay, not investing. You got sold the fairy tale that own the index, own capitalism. In 2026, that's a half-truth. You own the loud part. The quiet part, private credit and the AI landlords, is where the new compounders are born. This is not financial advice. It is a reminder that if you don't know who is collecting rent on your future, it's not you. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.